It's about that time of day again. My name is Joseph, Tuesday evening, June 26th. Welcome back to your nightly newsletter. My job is to help new traders earn consistent profits using a simple and reliable trading strategy. And my plan this evening is to identify the most reliable trading opportunities setting up for tomorrow's trading session. And tonight, I'm covering crude oil, S&P, Nasdaq, gold, and euro. Starting off this evening, crude is bullish with a spike in channel. After a strong run higher this afternoon, my plan is to look for buying opportunities using seller failures down below the moving average tomorrow morning. The S&P is range bound, and after the buyers just failed to break out higher, I'm looking for selling opportunities down to the pendulum swing and then switch it right back around and look for seller failures for buying opportunities back into the range tomorrow morning. Nasdaq is bullish with a spike in channel that's quickly turning into a range here this evening. So my plan is to focus on buying opportunities, but I got to stay patient to go down to the low of that range tomorrow morning. Gold is bearish and appears to be range bound heading into Wednesday's session. So my plan is to fade the bullish breakouts for selling opportunities tomorrow morning. And last but not least, the euro is bearish this evening with a spike in channel pattern. So my plan is to find selling opportunities using buyer failures up near the battle zone above those highs tomorrow. Speaking of tomorrow, I've got a great newsletter in store for you guys and gals tonight. We have a ton of reliable opportunities setting up for Wednesday's session. Before we jump in and put the plan together for tomorrow, I do need to remind you, if you're watching me on YouTube this evening, you can find a detailed description of this entire strategy written out right here on my blog at sidewaysmarkets.com. Find the link in the description of the YouTube video. Also, if you have any questions about anything covered in this video tonight, please remember to post those questions in the comment section below. And if you like what you see, please help support this channel by subscribing and make sure you hit the bell icon so you get notified every time I post another video. And don't forget, if you really want to stay in tune with everything we do here at School of Trade, head over to sidewaysmarkets.com. This is where all the action happens on our trading blog every day, and grab our mailing list. Join the mailing list in the upper left-hand corner. Give me your name and your email address, and I'll send you an email every time I publish something new. Also, don't forget, I'm always posting on social throughout the week, charts, links, quotes, videos, all kinds of great updates throughout the week. You won't find them anywhere else on any other channels. Follow me on social in the lower left-hand corner. And how about those charts for tonight? All those charts from tonight's video, how easy is this? You can have them on your computer tomorrow, right where it says click here to download today's charts. Grab those charts and be ready for tomorrow's trading session. And speaking of tomorrow's trading session, how about a free pass? If you're not a member here at School of Trade and you'd like a deeper dive into the strategy we use and an invite, come out and join me in our trade room as a guest. Grab that free pass in the upper right-hand corner, and I will see you right in the trade room tomorrow. And don't forget, I have live support on the right-hand side of the website. Again, you can post your questions in the comment section below, but if you need any help along the way, you can always hit me up on live support. I'm always standing by to answer all your questions. All right, got that out of the way. Let's jump in and take a look at our plan here for tomorrow. Tomorrow is Wednesday, June the 27th, right? Middle of the last week of the month. We talked about this in last night's newsletter. As we get closer to Friday's trading session, we do expect to see increased volatility as traders, start to scramble as we go into the end of the month. The end of the month, especially the month of June, oftentimes has lower volume because of the pending 4th of July Independence Day holiday next week. Combine that lower volume with higher risk taking because it's the end of the month, and as the end of the month approaches, traders who are underwater for the month, they start trying to make up for lost time. Traders who are ahead of the game for the month, they oftentimes are a little more risk tolerant because they're trading with quote unquote house money. So combine that lower volume as we go into the holiday week next week, along with the end of the month risk taking or risk tolerance, and you have the recipe for a very volatile session Wednesday, Thursday, and Friday. We also know that Thursday and Friday, we also have that EU summit. If you recall, we had the ECB summit a few weeks ago. This, of course, will be an EU summit. I don't think this will have as much of an impact as that ECB summit. They're telling us now the focus is more on immigration rather than the economy later on this week. So it shouldn't be too big of an impact. But, we'll always keep our eyes and ears open to see how it impacts the market as we get closer to that date. Looking at tomorrow's session, though, you can see we get a big bang starting off tomorrow morning, right out the gate tomorrow. We've got durable goods and international trade right at 8:30 Eastern time. So definitely keep your eyes open early in the session tomorrow morning. As we go later in the session tomorrow, right, we have the inventory report on crude oil. That is the weekly inventory report. As I always remind you guys, I love trading crude oil, but after 10 a.m. on Wednesdays, crude becomes one of the most difficult markets that I can find. So my cutoff on Wednesday mornings, my official cutoff is always 10:15 Eastern time. But again, right, I'm always watching up until about 10 o'clock on Wednesdays. And once 10 o'clock hits, it's usually too slow to really trade. What about after the news comes out? The problem with after the news is it's highly volatile, it's illiquid, it's dangerous. And so what I would highly encourage you to do is be very, very careful if you do choose to trade crude oil after that news comes out. My personal opinion, I skip it as of 10 o'clock on Wednesdays, and I'll come back, right, and trade it on Thursday. So that's the plan for tomorrow. We got the news tomorrow morning, durable goods, international trade at 8:30. We got the inventory report at 10:30, so get to it early if you're trading oil, and hopefully those durable goods orders, international trade number will give us a nice shot in the arm, right, early tomorrow, right, for a great trading session. As always, we'll be in our trade room tomorrow morning at 8 o'clock Eastern time. I look forward to seeing you there. All right, let's jump in. We got crude, S&P, Nasdaq, gold, and euro on the schedule here for this evening. First of all, starting off on crude. Crude is bullish with a strong run higher today, and these higher highs tell me to look for either a channel or a wedge for tomorrow morning. No matter which scenario we get, the plan is quite simple. I'm looking for buying opportunities using seller failures on a deep pullback off the highs. And remember, get to those trades before 10 a.m. Eastern time tomorrow morning, because we have that pesky weekly inventory report tomorrow out at 10:30 Eastern time, and who knows where that will take us. As you can see here, a very strong run higher in today's session. We talked about the fact that we needed to see some strength before we could feel comfortable buying this market, and well, we definitely got that strength. Big, strong run up, a pullback, and a new higher high. Now, anytime we see a strong move in one direction, we call that a spike. And usually that spike will produce a spike and channel. Spike and channel patterns tell me to buy at the low of the channel. They also tell me to look for buying opportunities down in the deepest part, kind of the beginning of that channel, late in the process. Now, there's also potential this might also be a wedge. In other words, we see a strong move up, a spike, a pullback, a new higher high, but now instead of rotating down to the low of the channel, what happens? We see it rotate shallow. And when we see that failed rotation, right, that's the key here, that failed rotation, now it basically tells us this is no longer a channel, it's actually a wedge, right? And as the wedge gets narrower, we talked about this last week, right? As the wedge gets narrower, we then expect to see a nice deep pullback, which is usually the big trade of the day, right? Once we get that narrow wedge. So as you can see, both of these patterns, they're similar, but they're very different, right? A spike and channel has two parallel lines, whereas a spike and wedge, right, has two converging lines, right, getting closer as they go. They both, though, however, start with a big, strong move up, and they both will want to wait for that nice, deep pullback. So as I look at this chart right now, I can see strong move up, pull back, up off that high. Here becomes now my spike and channel. So really at this point now, I'm looking for buying opportunities off the low of that channel. Or, more importantly, I'm looking for that deep pullback, right, for a buy down in that battle zone. And you can see what I've done here. I'm kind of cheating a little bit here. I took those lows, And you'll notice if I line them up at the high, it really fits like a glove at that high. We'll add the midline on there, right? Add a midline on there, and you'll notice that midline right there as well, right? That's a little bit too convenient there, right, for that not to be in play. A lot of times people will use those higher lows to project this going forward. So the bottom line is I can also use this midline. And this is also a common question we get. When would you use a midline? When's the best time to put a midline on a channel? Well, usually channels are relatively narrow. And when the channel is relatively narrow, putting a midline in here isn't going to do much because traders aren't going to, they're not going to have enough space inside of that channel, right? Make that channel a wider channel now. And all of a sudden now the midline can be used now as both support and resistance, right? We can use it as support. We can use it as, right, resistance on the way back, right, up and down around that range, right? So that's kind of the clue that we can use that midline. So again, higher highs down to that low, incorporate that midline. I want to get this puppy down so I can buy this sucker back up. Now, where is this market likely going right now? Well, here's a trick I learned many, many years ago. Whenever a market starts going lower and then reverses higher, I can take the amount of the move lower and then double it, triple it, quadruple it. And that gives me what I call a quadruple up, or a double up, triple up, and quadruple up. It's kind of a variation of a measured move because as you can see, you really can't use a measured move here, right? I mean, you can try to, right? But it's really not a very good look at a measured move. So because there isn't really much of an option for a measured move, we know that traders are human beings. They're going to look for something to use as a target, right? Now, if we can get through the quadruple up, and usually 4 legs is about as far as these markets go, what else do we? Oh, hello, the prior month high. Well, isn't that convenient? Remember we talked about this last night on the newsletter, right? End of the month coming up, we start looking at those prior month levels. So that is a big juicy carrot at the end of the stick right now for the bulls, right? Bulls are definitely going to be salivating over that prior month high at 72.69. So we're definitely going to keep our eyes open for that. So we get a strong bull trend, we get a strong bull spike and channel, maybe a spike and wedge. It looks like we're almost up to where the market wants to go. 1, 2, 3, and 4 legs higher. So I got to be careful being a buyer up here. I want to buy low. What's the plan here for that? Well, it's relatively easy. If we do get a pullback, we're most likely going to end up down below that moving average. Right? Moving average comes over. And of course, anytime we see a lower low, you're always going to have those scalpers, those rookies, those traders who don't know how to read markets context, right? And they're going to try to sell this market lower, right? And we hope they do. And if they're successful, we can look at this as a new bear channel and we can sell off the highs of that bear channel. Right? But I'm getting ahead of myself right now. The odds are not on the side of the sellers right now. And so when we see those bears try to sell that pullback, I'm going to look for a buying opportunity just above those highs, right? And we call this the 2-try rule, seller failure. Bears go down once, they try twice. When they fail, we can now look for a strong move up for a buy. Now remember, we as professionals, right, we're all professionals here, right? We don't buy high, do we? No, we don't chase after that. What we do is we now wait for that moving average to come over, we wait for the pullback, and we buy on the pullback. So my plan here is to get this market to pull back, get below the moving average, let those sellers try once, try twice. That way we can buy their failure. That failure should result as those sellers get stopped out. They've got to buy their way out of their short, right? Short covering rally. We rally higher. We don't chase after it. We wait to buy the pullback off the moving average, right? So that's if price pulls back here for us tonight. What if the price, right? What if we go higher here, right? What if we go higher here? Well, if we go higher here without pulling back, now what I'm going to do is I'm going to adjust this spike and channel. Right? And literally the plan is the same thing. failure, strength, pullback, right, and back up, right, to retest that high. Does that make sense? Right? So if we do keep going higher here, the plan doesn't change. We just have to adjust, right, this channel to accompany those new higher highs. Now, one more scenario here would be, what if we pull back, we double top, and we bounce? If we see double tops in this trend, right, if we see double tops here, that tells me we now have a range. Let's mark up that range low. That becomes a bullish market into a trading range. We talked about this last night. What do we do in that situation? We look for buying opportunities down below the range using what? The 2-try rule. 1 try, 2 try, bears try twice, and we look to buy on that seller failure with that 2-try rule. Right? So far we've talked about, right, spike and channel pattern, looking for that failure and then back up. Right? What if it goes higher, right? If it goes higher, we adjust that spike and channel, buying off that low, right? If we do pull back and we go back and double top, trading range, 1 try, 2 try, failure, back up, right? We got it all covered here. Now, if you're here for the first time today, right? I know many of you guys are probably watching my newsletter for the first time this evening. I want to give you a big opportunity to learn more about all the fine details of this trading strategy. Now, I can't give everything away here tonight because I've only got so much time here on this video and I've got a lot more to cover here tonight. I want to give you a deeper dive to learn more about the entry patterns, the markets I love to trade, the time frames I use, right? I'm going to put a free trading course in the upper right-hand corner. That free trading course will teach you and give you a deeper dive into the strategy we use every day in our trade room and the strategy that I teach every night here on the newsletter. So if you want to learn more of the secrets, I can't cover them all here, grab that free trading course in the upper right-hand corner. Not to worry, pause the video. I'll be here when you come back. Just make sure you get registered, and I'll send you a series of videos that will walk you through the entire learning process so you can make the most out of our time together every evening on our nightly newsletter. Now, we talked about this earlier. The only thing we really haven't covered yet is how do we turn bearish? Right? Remember, tomorrow's the weekly inventory report. I'd be lying to you if I said they weren't potentially going to reverse this market. Tomorrow morning, after that news comes out, what does a reversal look like? I call it a 1, 2, 3 reversal. Right? What's a 1, 2, 3 reversal? Strength, 1, pullback, 2, strength, 3. Strength going lower, pull back to the moving average. It's got to pull back to the moving average. If not, you're still waiting for that. And then strength is 3. Okay, then what do? Do we chase after this? No. Right? We draw the new trend line down off the lows because that's going to be pretty much the only thing you have to work with at that point. We'll take that trend line, bring it up, parallel line, up off that high, and now we look to sell off the high of that channel. Where's the target? Back down to retest that 67.71. So sellers trying to get down to that 67.71. Buyers are trying to get up to that quadruple target at 71.08. And maybe if we see it strong enough, right, we can look for that move, buying pullbacks, using the top of this channel, right, on the way up to that prior month high tomorrow, right? So watch for strength as we go higher. But again, my plan is to wait for the pullback to buy low at support. All right, let's move from a very strong trending market to a market that apparently can't get out of its own way here today. The S&P is range bound and rotating back down to the low of the range this evening. And the pendulum swing coming off the high gives me the perfect location to look for the 2-try rule and seller failures to buy going back up to the high of the range tomorrow morning. Now, of course, we got a lot to cover on this chart. There's a lot going on here. First of all, you can see here there was a bullish move into double tops and double bottoms for this trading range. Short term, we have a bullish trading range. But it doesn't take a brilliant technician to look a little bit further, and you can easily see, right, these sellers, right, put a whooping on these buyers yesterday. And so for the most part, long term, right, we are bearish right now. So, of course, you got long-term down, short-term up, and no wonder, right? No wonder this market can't get out of its own way right now. The bottom line is today was plagued by a range. Well, maybe not the word plagued, right? I love trading ranges. Ranges are always relatively easy. Buy low, right? Sell high, fade those, right? Fade those edges. So we know we have, again, a little bit conflicting signals. Long-term trend is down, short-term trend is up. The bottom line is I think we'll be good to go for buying and selling on both sides of this market, right? Simply put, anytime we see a trading range, we look for failures. I want to buy low, I want to sell high, I want to avoid the middle, right? Stay away from that middle, buy low, sell high, away from that middle, and focus on failures, right? So what's a failure look like? 2-try rule. We break out, 1 try, pull back, 2 try, failure, back in. We break down, 1 try, 2 try, failure, back in, right? Looking for 1 try, 2 try, sell it back down. Looking for 1 try, 2 try, buy it back up. Stay away from that middle. Another thing you want to remember is the size of the breakout, right? The size of the break above the range is usually about the size of the break on the opposite side, right? One more thing you want to think about when it comes to a range, if I take this range and I double it overhead, that gives me resistance. If I take that range and I double it below, that creates support. Right? We call these range expansions, right? So as the market goes higher, we can use that as resistance, going back in, use this as support, right? Going back in as well. So 1, 2, 3, here we go. Back to our chart, right? There's my trading range, double it, right? That creates resistance, that creates support. There's my range pendulum swing, right? Remember, ranges are balance. That's what ranges are. Ranges are balanced markets. So when we see the market shift outside of that range, the pendulum will swing back into the middle, but it will usually keep on going. You guessed it, usually about the same distance on the opposite side. So right off the bat here, we can see we're coming off the highs and we're trying to rotate back down to those lows. Will we stop at the lows? Probably not. We'll probably shift through those lows, right, down to that pendulum swing area, right, down in this area down here. Now, keep in mind, pendulum swings are a basic guideline, right? Don't hold your breath for getting that exact 2709 or 2710 area tested tomorrow. Let's get in the area, right? What I really know from a pendulum swing is I'd rather look for a buy deeper, right, than look for that buy right up at the low of that range. So let's talk about this for a second. We know we want to sell high, we know we want to buy low, and we know we want to avoid the middle, right? As you can see, we're coming off of that high. Now what you can do right now is you still got time to get short. All we need here, though, is we don't want to trade into that range. The range is relatively narrow. So the narrower the range, the more you have to worry about being inside that range. For example, if the range is really, really narrow, there's not much space to trade inside. So you've got to get outside of it and then go back in, right? That way I can take a small amount of risk, right, for a big amount of reward. If the range is relatively wide, well, then it's not that big of a deal if we buy off the low, right, coming off that low. Stay away from the middle, though, right, and of course we sell off the high, right? It's not as restrictive if the range is wider, right? So you can see there are two very different personalities, right, to a range-bound market. This is a relatively narrow range. So being inside the range right now, what I really want to do is, I want to get out, right? Let's get out. Let's get up to that 32 3/4. Let's get that moving average coming over. Let's get the buyers trying to buy the pullback, right? And let's sell it right back down in. Now, what happens quite often is we see a situation like this, where we go up 1 try, 2 try, failure into strength, strength into pullback, and pullback back in. Right? So 1 try, 2 try, that leads, of course, to a failure, That failure runs back down. Moving average, of course, comes over, and we're looking for sells again as high as we can get it, right? Trying to sell that 2-try rule. And if we can get it, again, this is where the hard part is. We don't want to sell too close to that middle. We want to sell up around the highs, right, of that range. As we go lower here, same thing, right? We go through 1 try, again, get into this area. It doesn't need to be exactly at 2709 or 2710. Just get me into the area. Strong move comes down, moving average comes over. We see bears try to sell it. Right? Once they sell it, we now know where their stops are. We can look for that 2-try failure. We don't want to buy high. We don't want to buy the middle. So what do? We wait for the pullback, right? And we buy as it pulls back to that moving average, right? As we're going back into that trading range. 2-try rule. Buyer failures, seller failures, strength into pullbacks. Guys, don't forget, for a deeper dive and to see more of these patterns, right, especially on real charts, you can see what they look like. Grab that free trading course in the upper right-hand corner. Last but not least, how do we break out of a range? Well, remember that 1, 2, 3 reversal we talked about, right? Remember it again. What was it again? It was strength, pullback, strength. Yeah, same thing. Right, so how do we know if we break out of a range? I want to see a strong move out of the range, right? Got to be strong, that's the key. A pull back to the moving average. Again, if it doesn't pull back to the moving average, it's not a pullback. Okay, pullbacks have to go to the moving average in this, right? In this 1, 2, 3, breakout scenario, right? And then 1, 2, 3, right? If we do get that strength going higher, perfect. We'll grab that new channel. Find that new bull channel, right? And I'm looking to buy the pullback off that low. Same thing to the downside, right? 1, 2, 3, big blast down. Find that new channel, right? Sell off that channel. As of right now, though, we're range bound, right? So buy low, sell high, fade those breakouts, right? Until it's obvious with that strong move through, right, that they're breaking out of this range. How about some Nasdaq? Nasdaq is bullish with a spike in channel pattern, but it appears the buyers failed to hold new higher highs this afternoon, telling me to expect a range to develop into tomorrow morning's session. Knowing this, my plan is to look for buying opportunities using seller failures down at the low of the range, or wait for proof of a successful breakout pullback to new highs tomorrow morning. Now, in order for me to give you kind of the full rundown of this chart, it all goes back to, we talked about this last night. Anytime we see a strong move in one direction, what do we always expect? We expect to see a 2-legged pullback and a retest of that high, right? I know this sounds like a broken record right now, right? We talk about this pretty much every night, but it's important for this particular situation. Okay, the objective, as I call it, right? The objective, if I can get my spelling on here, right? The objective, as we call it, the market's objective. Once we reach that market's objective, then we time out, right? Quick wait here. We look for one of two things. What are the two things we look for? We look for either acceptance, okay, and acceptance is usually during a real strong trend or after a news event comes out. It's a strong push through. In fact, it's so strong that it makes you feel like if you don't buy it now, you're never going to get a chance to buy it here again, right? It's firing on all cylinders. So acceptance feels like it's a 90% discount sale. Get it while you can, right? It's got that personality to it. Okay, these are when we see acceptance, that will take us to a measured move. Right? So we know we have that first leg that becomes, right, A, B, C, D, okay? So that's right, that's the first scenario. The second scenario is going to be rejection, right? Rejection. Now, what does rejection tell us? Rejection basically says that they're happy with the retest of the high, but we don't see value in buying at that price anymore. Right? It could be a car dealership who raises their prices up into a point where people stop buying cars. At that price, the price gets rejected, right? And what happens? The car dealership now has to lower prices to get people to buy again, right? This happens in all kinds of scenarios, anything, right, where there's a commodity where supply and demand are involved. Now, what does rejection tell us? Rejection basically tells us that we now have a trading range. I want to look back in time, find the deepest point of the pullback, and that ultimately now becomes our range. Once we have that rejection in place, now we know we want to buy down around the low of that range. And it's ultimately a spike and range pattern. So again, the key here is strong move up. We retest that high. Do we see acceptance or do we see rejection? Because that's going to tell me exactly where to look next. And you tell me, what do you think here, guys? We see a strong move here, right? Spike and channel, big strong move going higher. We get that pullback. We retest the high. What happens at the high? You tell me. What happened here at the high? Does this look like a fire sale, 95% discount, get it while you can, might never? No, right? Definitely not. That's not the personality we got. In fact, you can even see buyers tried to buy that pullback, and you can see, right? If we were really humming here higher, this would have been bought, and we would have been running higher here for a large measured move. Okay? What didn't happen is more important than what did happen. Okay, and that happens a lot in trading. We expect with that strong move up, we're going to blast through those highs. We don't. So now what do? We look back in time. We find that lowest point, right? And that now becomes, right, where I want to be a buyer tomorrow. Now, in all reality, I really debated on this because in all reality, this could be a little bit narrower, right? So if you really want to kind of be fully prepared here, it could only be as low as that. And I really debated on this of whether or not to shave off that wick or not. But usually, I'll tell you, usually it's the deepest part of that pullback. Usually it's not that particular. Usually it's right at that lowest low. Okay? So the bottom line is now we're seeing what? We're seeing rejection. Right? We're seeing rejection, like my high school girlfriend. I'm just kidding with you. Have some fun with you guys. But again, right? We're seeing rejection, right, at that high. I try to have some fun with you guys here every evening, right? And what do we look for now? We look for buyers now to be looking for price, right, at a much lower price, right? Because apparently they're not ready to buy up here right now. Apparently the value hasn't increased high enough for the demand to be there yet. All right, so now there really are two scenarios. The first scenario would be, let's see that pull back and let's buy off that low, right? The second scenario, right? Second scenario would be we see strength going higher. Okay, now this is going to be a bit tricky. Okay, this is going to be a little bit tricky because you can see we've got the measured move up here. It's not going to be a walk in the park here for the buyers. So let's talk about these two scenarios here. Price goes up and price goes down. First, I'd love to see us go lower. Hopefully, we get a nice strong move down to those lows, bring that moving average over. Let's get this a little bit there. Perfect. We go down, right? Again, down around that 70-70, 70-60. Hopefully, we go even lower, right? Hopefully, this thing goes even lower all the way down to what? The pendulum swing, right? Pendulum swing above, pendulum swing below. We talked about that earlier, right? So hopefully, we really dive deep. Again, I don't care how far we go, the farther the better. Moving average comes over. What's going to happen? Sellers, just like they tried to right here, they're going to try to sell that pullback, right? It's a bull market, though. It's not a bear market. It's a bull market. So those sellers do not have the odds on their side. When they fail, what? Strength. Strength goes to the highs. We buy the pullback and go. Same thing we're looking for now over here on the right. We look for that sellers to try to sell that pullback. We know where their stops are. We can now look for that failure for a 1, right, into a pullback for a 2, right, and a retest of that high, right? 2 try rule for the bears, 1 try, 2 try for the bears, right? Seller failure, bullish pullback, bullish pullback. Okay, this goes on and on and on. This is not just the Nasdaq, right? And it's not just this particular situation. This happens every day, all day. And you know it does if you watch my nightly newsletter. So, as you can see here, I want to see it pull back. 1 try, 2 try, failure, strength, pull back, right? And back up we go. What if price goes higher here? This is the tough part, right? This is the tough part. We've got that measured move overhead, right? So with the measured move here, we can't just buy a pullback, right, into that measured move. What I'm going to look for tomorrow is I'm going to want to see us get above that high. Get above that high, get that moving average above that high, right? And let's buy that pullback from there. Make sense? Right? That's what I'm looking for here tomorrow. In fact, to be completely honest with you, what I want what I call the fake out breakout pullback pattern, which requires a strong move through. Moving average gets above that level of what is now resistance, gets above level of support, and then very important, we look for a two-legged pullback. Okay, the two-legged pullback is really important because what it's going to do is it's going to get the sellers thinking we're going back into that range. It's going to give those sellers just enough rope to hang themselves with, and that will offset buying a breakout. Because remember, breakouts are overall, they're relatively low probability. In fact, they're very low probability. So whenever I see a breakout of a range like that, I'm always looking for that, trying to get the sellers to think they've got an edge and then buy into their stops. And I call that the fake out breakout pullback pattern. All right, guys? Now, one more thing here again, buy low. If you want to sell high, one try, two try. Can we sell this thing back into the range? You can, but rather than taking it, again, remember, if we go lower, remember the market's bullish, right? Market's bullish. So if we go lower, one try, two try, I can buy that failure because the momentum is on my side, right? But if we go higher here, one try, two try, can I sell that failure? No. A lot of times what happens is if you try to sell that failure, right, what you'll end up getting is, well, look what happened here. How about this, right? That's a failure, but what? Buyers are waiting, right? Buyers are waiting. So what happens is if you try to sell this failure now, a lot of times what happens is it'll trap and then go. And you'll wind up, your stop losses, right, your stops up here will literally be gasoline on the breakout to light that fuse and let it rip, right? That's why trying to call tops and bottoms is so dangerous, because your stop is sitting duck up there and people will buy right into it. Okay, not my cup of tea, but that's, again, I don't want to sell that failure. So what do? You wait for it. You wait to see proof that it fails and then sell off the moving average. Right? You wait for proof that it fails. That makes sense, guys? When you're going against the momentum like this, wait for proof, and then, right, you can let her rip from there. As always, right, don't forget the 1, 2, 3 breakout, 1, 2, 3 breakout, right? New channel, buy that pullback, 1, 2, 3 breakout. It actually would be more like this. It'd be 1, 2, 3 breakout, new channel, right? Sell off that high, right? Et cetera, et cetera. Same plan, just different market. And again, should be a relatively interesting session tomorrow on the Nasdaq. How about some gold? Another example of what should have happened, didn't happen, and that's the most important clue. Gold is bearish with a strong move lower today, but after such a strong move down, the bears were unable to retest the low? What's up with that? The only answer is they went too far. They went too fast. And now they need to wait for the rest of the market to kind of, right, catch up with them, right, catch their breath. So it looks like we're going to be going sideways with a range tomorrow, which tells me to look for selling opportunities using the 2-try rule, right, and buyer failures up above those highs tomorrow morning. Now, this is, you got to remember right now, gold is going through a little bit of a beating right now. It's pretty low volume. It's relatively choppy. As we talked about last night, the gold has been plagued by kind of fits and starts, right? It has this kind of weird personality to it right now. And it has to do with this back and forth between Europe, the U.S., China, Canada, all the tariffs, right? And the so-called, trade war that the media wants to be so scared about, right? Everything's going to be okay, though, right? It always is. In fact, remember, the bigger the media uproar, usually, right, the faster it distinguishes, right? It's usually pretty comical about the whole situation. So everything's going to be okay. But right now, in the short term, gold's definitely taking it on the chin, right? We saw that really low volume range yesterday, and then today we open up, right, and it's just bloodbath, right? Straight line down. So whenever we see a straight move lower, right, strong move down, what do we expect? We expect a two-legged pullback and a retest of that low. Well, boy, they really had this going, right? Had that strong move down and then nothing. They pull back to the moving average and we see dojis. Dojis, that's all you're giving us here right now? Okay, something's wrong, right? Something's wrong, right? I just walked into my favorite ice cream shop and I don't want to get a scoop of ice cream. Something's wrong, right? Somebody take this guy's temperature. He's clearly not feeling well, right? So we can easily tell here something's up, right? It's what didn't happen that is the most important clue. And what it looks like is, it looks like they want to take that low and this high and make it into a trading range. I think you can probably go and draw this down as a trend line, up as a trend line. This is now a bearish bias into what kind of feels like it's going to go range bound. So what's the plan for a range? Sell the high, buy the low, focus on failures, and use that 2-try rule. So we go up, 1 try. Moving average comes over, 2 tries. Remember, it's got to pull back to the moving average, right? Failure, back into that range. Okay, now remember, bearish market right now, right? So we go down. Get this little zoomed in here for me, right? Get my Bob Ross going on, right? We go down, 1, 2. Can we buy this failure? No. Why? Momentum. What do? Right? We wait for that failure and we can buy it low as it goes back up, right? That's that key difference, right? Momentum is lower, right? Momentum is bearish. We go up, 1 try, 2 try, failure, pull back down. I can take the failure and the pullback, right? Can we do the same thing for the bull side? No. 1 try, 2 try. You can try to buy that, but again, oftentimes it's a trap, right? And bears will make you pay for it, okay? And here's a word of caution. Your stop loss down here is not going to hold. It's not going to hold. Well, think about it, right? And this is why it's so important for new traders to understand why calling tops and bottoms, and more importantly, going against the trend is so risky. Okay? I said risky. It is risky because when you go against the trend, your stop, well, think about it. If you're buying, what is your stop? Your stop is a sell order, right? Now, if you get your sell order triggered, now think about this, okay? If you got to put your helmet on, my dad would always tell me, Joe, put your helmet on before you go thinking so much, kid, right? So if you want to, take an Advil first. I'm kidding with you. But all kidding aside, if you get stopped out here, right, what is your stop loss? If you're a buyer, stop's a seller. What do you need to get out of the market? You need buyers. Do you think anybody's going to be buying down here? What do you think? Can I get a show of hands? Who would like to take the opposite side of my trade? Who's going to be the lucky person to get in long down here? You see where I'm going with this, right? That's the problem. If you think you're going to get out at 12.56, you're not going to get out at 12.56, right? What happens is it goes running through your stop. And because there's nobody sane enough to take the opposite side of that trade, you end up getting a bunch of slippage. Does that make sense? Okay? If it doesn't, put a comment in the comment section. Let me know, and I'll go into more detail in the comment section below. All right, guys? So again, stay away from calling bottoms in a bull market. Wait for that strength. Then you can go in, right, and buy that pullback. Stay away from the middle. Sell high. Again, careful buying low. And how do we break out? We go strength, pullback, strength. Show me some strength going lower, and I'll gladly look to sell right along with you. But I need to get that strong move down. I need to see some strength here because as of right now, I got nothing. Right? I got nothing. Let's say we go lower. We bounce off that low. What happens? Trading range. Up, failure, back down again, right? Okay, so stick to the sell side, right? How do we reverse? What's a reversal look like? Strength, pullback, strength, 1, 2, 3 reversal, highs, mark up that low, by that low, right? It'll usually be somewhere between this high here, right, and that trend line there, okay? Looking good. You know the plan here. Good work. And again, you want a deeper dive into all these patterns? Upper right-hand corner, grab that free trading course, right? Find the information icon there, right? And you'll be glad you did. All right, let's wrap it up now on the euro. Over to the euro. Euro is now bearish with a spike in channel pattern as the pendulum swings back in the opposite direction for the sellers this evening. My plan is to look for selling opportunities up near the highs of the channel and possibly buyer failures up in that battle zone tomorrow morning. We have quite the interesting scenario here today on the euro. First of all, the directional trend is bearish. We have a strong move down, a pullback, and a new lower low. What does that tell me? It tells me look for a spike and range. Spike and channel. This is the exact same pattern we talked about at the very beginning tonight. We take that up that high, and it fits like a glove. So we have this spike and channel pattern now. What does a spike and channel pattern tell me to do? It tells me to sell the high of the channel. It tells me to go up, right? Towards where? Towards the base of that channel and to sell up there. What else do we have here today? We have a trading range, right? If you recall, that range from late last week, early this week, right? What happens? We break out and collapse. We break higher, pendulum swings. That's my target, right? We expect that pendulum swing now to be where the market wants to go. So we know where the market wants to go right now, right? But look where we are currently. We're at the low of that channel, and more importantly, at the low of a range. Now, question for you, right? Pop quiz. When you have a range and a channel in the same chart, which takes precedence? When there's a range and a channel, which takes precedence? What do you think, right? What do you think? Yeah, it's definitely the range. The range will always take precedence over a channel, okay? And the reason why, right, the reason why is because ranges are balance areas. And balance areas, and this is, spin-offs of market profile theory, auction market theory, right? Ranges are where the most amount of volume is traded, right? So if you were to look at a volume chart, like those fancy, volume profile charts everyone likes to spend a lot of money on these days, which really aren't necessary. I'll leave my opinions to myself about that, right? You see price, right, going higher, right? Where's that high volume? It's always right in the range, right? It's always right in the range. If you were to put a volume profile on the right-hand side, where's the most amount of volume accumulating? Yeah, it's accumulating right in that range, right? So if you study auction market theory like I have before, again, it's all kind of common sense, to be very honest. They try to dress it up by making fancy indicators and everything for it. But, again, wherever the most amount of volume was, shocker, it's a trading range. Of course it's the most amount of volume. Am I the only person that sees this thing rationally out there? Everyone wants to talk about this, some special formula, right? Look at it, right? We see up, down. Of course that's where the most amount of volume is. Price overlaps, right? That's obviously going to have more volume being traded than these areas. That's why I always tell people, skip the volume profiling, skip all the complicated indicators, and just find a flat moving average, for crying out loud. Right? A flat moving average will do all of this for you. Once that moving average flattens out, bingo, I know exactly what the volume profile is right there, right? You don't need all these extra fancy indicators, right? So anyways, off my soapbox. Moving average goes sideways there, right? This is where the volume is, right? This is where that volume magnet's going to be, right, back and forth. So whenever we have a range and a channel, what takes precedence? The range does. I got to treat the range with caution. So I don't want to be selling into the low of that range, right? I want to get up. Okay, now again, let's pretend for a second there's no channel here. Okay, it's just a trading range. What would you do if you didn't have a channel? You'd be looking to sell up here, wouldn't you? Yes, please say yes. Okay, so we'll go up. What we'll do is we'll go up, look for a failure. One try, two try, failure, strength, pull back and back down. Okay, that also ticks the boxes for the channel, doesn't it? Right, because the channel, I want to sell the high of that channel, but I want to sell up above the high of that range. Okay, so remember, treat the range first. Okay, now that's easy, right? We go up, we sell the high with what? A failure pattern because it's a range. The hard part now is if it goes lower, right? See, this is where it gets tricky. Because if it goes lower here, now we've really got to be careful. For example, it goes lower, it pulls back. Now what do we do? See, this is where it gets hairy here, because now you're selling into, right, that trading range. So a couple scenarios I'm keeping an eye out for tomorrow. The easy one is up, failure, strength, pull back, back down in. The hard one's going to be we keep going, we got to get back up, at least up around that high, and to sell that high. Right? This could be a mess tomorrow if it goes lower, gets stuck, right? And then up, one try, two try, failure back down from there, right? Another potential option is we use that range as resistance, right? We end up rotating and we can use that range, right, as resistance on top of that channel. But that's going to have to be a very unique situation where we have the top of that channel along with the bottom of that range lining up. Right? I would much rather skip that sell, right, and take the second one in this sequence. Because again, the range is right, the range is where it's at. You got to make sure you respect that range. Okay? Now, once again, momentum is bearish, right? So one try, two try, back down in, yes. One try, two try, back up in, not a very good fit, right? Not a very good fit. We'll stay away from the buy side unless there's one scenario tomorrow where this becomes equal, and that is if we see it start rotating back and forth, right? If we basically abandon this bear bias, right? We see double tops, double bottoms, we start rotating back and forth, well now whatever bearish tone there was now is evaporated. Does that make sense? So now we go into one try, two try, failure, one try, two try, failure. Keep in mind, that's going to happen middle of the morning tomorrow. It's not going to happen in the short term. We're going to have to see this market pretty much give up, right, on this short-term range. So we're talking 9:30 to 11:30, 12 o'clock tomorrow. That time frame, that's where you'll likely have enough information, maybe earlier. Hopefully it is earlier, right? But we're going to need a little bit of time to get that right, to get that information be processed. All right, guys, got a great plan on that, right? And again, ditch all those indicators, right? All you really need is candlesticks and a moving average. And really, the moving average, you could get rid of that too. Once you start seeing double tops and double bottoms, overlapping candles, you know where the volume is. You don't need to ask a friend. You don't need to pay a lot of money for indicators. You just need to know how to read a chart. Speaking of which, don't forget, we read these chats every morning in our trade room, 8 o'clock Eastern time. We open up our trade room with all of our advanced members. We get a great classroom material here at School of Trade. They don't call me Professor JJ for nothing. You can check out my beginner, intermediate, and advanced classes, right? Our advanced classes also come with unlimited access to our tools, our support system, right, and our trade room every day. We get a great free trial on the homepage of our website, so follow that link on the homepage. I'll put all the links in the description of the YouTube video. And don't forget, I'm always here standing by. You can type those questions in the comment section below or hit me up on live support on the right-hand side of our website. Guys, have a great session out there tomorrow. If I don't see you guys and gals tomorrow morning at the opening bell, be well out there, be nice to each other, will you? And be here next time. Adios, amigos. Bye-bye for now.